Hi there, welcome back to my channel. Stock market investing is actually much simpler than it appears to be. If you want to learn how to start investing in the stock market as a beginner, stick around. So the stock market is an electronic marketplace where people buy and sell shares. So if you're a stock market investor, you're ideally buying units of ownership into a company so that as the company grows, then your money grows with them. So we have two types of stock market investing, and this is where you need to pay the most attention, guys. We have what we call growth investing, and then we have dividend investing. Now, what is the difference between these two types of stock market investing? The strategy, okay? Growth investing is ideally what we call trading. So if you've had people say that I trade in the stock market, that is ideally what they're doing. In growth investing, the strategy is to buy low and sell high. So you target stocks that are selling at a lower price, buy them with an anticipation that the price is going to go up. And once it does, you sell and make a profit. Obviously, as you can see, that's a very short-term view of stock market investing. It's all about knowing when to kind of like, quote-unquote, time the market, when to go in and when to come out. Now, I will give a disclaimer here right now. It is very, very important that you understand that growth investing is normally not recommended for someone who's not very well trained in market analysis. You don't know how to do technical analysis or fundamental analysis, and you're also not a full-time day trader. If you're not any of those things, there's a very fine line between growth investing and gambling. Remember that when you, the difference actually between investing and gambling is that gambling is not data-driven, but investing is data-driven. So you see, if you're doing growth investing and you're trying to time the market and you're not ideally trained on how to do that, you're very much gambling, okay? So that is what we call growth investing. The second kind of investing, and the one that I recommend to anyone, whether you have background in finance or not, whether you are a day trader or not, this is a more long-term and sustainable way to grow your money, because it's not about timing the market or entering and exiting at any time. It's about taking your time to do proper research on companies, their innovation, the future that they have, the financial stability of this company, and deciding to invest in that company such that as that company grows over even 20 years plus, your money is growing with them, okay? And then even as they declare their profits every year or semi-annually, then they share the profits. So that's what we call dividends. Dividends is when they share the profits with you either annually or semi-annually. So as an owner, ideally, you share both in the profits and you also share in the losses. So that's what we call dividend investing. Now, I'm pretty sure you've heard me say losses and like your attention is up there. The thing about stock market investing, and this is one of the reasons it is referred to as a risky investment, is because as an owner today, even if you co-owned a business with your friend, right? Whether the business makes profit or not, and both of you are co-owners, you share both the profits and you also share the losses. So in stock market investing, it's still the same concept, only that the owners are maybe thousands of people who have invested in this company X, okay? So if the company makes profits, you all get a share of the profits as in dividends. If the company that year makes losses, then you are not ideally able to get dividends, because dividends are ideally paid from a company's profits. So that was just a very quick rundown, okay, of how stock market investing works. So let me take you through the simple beginner steps that you need to do if you want to get started with stock market investing as a first-time investor. So stock market investing is done in 3 simple steps. Number 1, you need to know how to choose a company or companies or the kind of portfolio that you would want to invest in. Step number 2, you need to identify and choose a licensed broker. And then step number 3 is about how to keep tabs on your investment portfolio or the companies that you have invested in. So how do you choose a company to invest in? The first thing, it should actually be a company whose business model and industry you understand. For instance, and this is if you're buying individual stocks. So if you're in the Kenyan market today, how do you decide whether you're going to buy, say, like KCB shares, Safaricom shares, EABL shares? It actually has to be a company whose business model you understand. So it's very easy to make this decision. The first thing that you want to find out is which industry does this company operate in? Is it in the manufacturing industry, agricultural industry, the banking industry? And try see if you can have a rough idea or an understanding. How does this industry operate? Or how is this one of the best performing companies in these industries? So I love to do stock market investing from the perspective of which are the best performing industries in the country right now, and therefore, which are the best performing companies, okay, under those industries. And that's an amazing thing, or rather an amazing way to diversify your portfolio, because instead of just putting all your money, say, in the banking industry, if something happens in the banking industry, then all your money goes with it. So you want to diversify based off of industries, and also just pick one of each, like one of the best performing companies or two, if you can be able to keep tabs on all of those. So that's the first thing. The second thing, you must do a proper financial evaluation of the company. Because guys, remember, we are doing dividend investing, and dividends are paid from a company's profits. So if a company has not been profitable, you obviously will not get any dividends, okay? So, and this is where some of y'all will not be happy with me. You cannot be a lazy stock market investor. Most people literally want to come to my DMs and be like, hi coach, let me know which shares I can buy. But then I'm like, but I don't know what you like. I don't know what kind of things interest you, because interest is very important, because you're interested, you'll ideally be able to see on the news when that company comes up, or news about that company. So go through the company's financials at least 7 to 10 years. You guys, listen, it's never that complicated. And I've been saying this to people time and time again. You see how it's a life skill to know how to tie your shoes? It's a life skill for everyone to know how to read financial statement. A simple profit and loss document or a balance sheet will ideally tell you the company's profits or losses and the company's liabilities, and so you can know the debt status. So even if you're watching me right now and you're like, oh my God, what is that? Commit to learning, guys. You're going to be putting your hard-earned money there. You cannot be a lazy stock market investor. Of course, you also want to follow up on the company's reputation and its leadership. Now, I'm not saying believe every rumor that is online, but from experience and what I've learned is that where there's smoke, there's fire. So every time you start seeing these people trending all the time, and there are some investors that are complaining, or they seem to be in a serious debt or liquidity situation, pay attention. Pay attention to the kind of press or PR that the company leadership has. Sometimes, it's not always, but sometimes that should give you pointers of what to expect. You also want to find out about the company debt status, because obviously, if a company is unable to manage their finances, they're unable to pay their obligations due, that will trickle down to you as the investor. Because remember, dividends are paid once a company has actually been able to pay all their obligations due. So if they're completely unable to pay their debts and all that, then you as a shareholder, you also fall in that category. So it may not be possible. Now, I'm not saying that if a company has debt, don't invest in it. There are very few corporate companies that are unable to operate without debt. Companies finance their activities two ways, okay? Today, it's a whole masterclass. So at this point, if you've not taken out your notebook, I don't know what you're doing, okay? So we finance companies in two ways, either by equity, which is what stock market investing is, or debt financing. So debt is not bad. The issue is the company sufficiently servicing their debt? So on a balance sheet, you can actually be able to see the company's assets versus the company's liabilities, and the debts fall under liabilities, okay? And then finally, what's the future of this company? I love to joke around and tell people that when you're choosing a long-term stock, you want to choose that as if you're choosing a marriage partner. You wouldn't just meet a guy yesterday and marry them today, right? I mean, well, I know some of y'all are out here doing it, but like most people will not. You want to spend time and get to know this person, get to know how they are when they're angry, frustrated, etc. And then you make a decision whether, okay, is this the kind of a person that I would want to actually spend the rest of my life with? So when you're choosing stocks, look at the future of the company. How have they been innovating? The product or service, how much longevity does it have in the long term? Because like at this particular point, I started investing in the stock market at the age of 26. And these are things I want to benefit me like in my 50s or even my children. So I have a solid 20 plus years to stay invested and for this money to grow in the stock market. So definitely I'm looking for sustainable companies. Guys, with stocks, especially if you're going to be buying individual shares, it's never about the number of shares you own. It's about the quality of the companies you buy. Okay? The second step is now finding a licensed stock market broker that you can use. Remember that the hardest bit was the first part, just identifying a company. But once you've taken your weeks or months of research and you've been able to identify the companies, now you need to find a broker that can give you a trading platform where you can now buy and sell shares. Remember that my recommendation is to buy to hold for the long term unless you are a trader, okay? Now, if you're a Kenyan, make the NSC website your friend, Nairobi Securities Exchange. On the NSC website under regulations, you will ideally be able to identify the licensed stock market brokers. And my recommendation is do not use someone who is not on this particular list. It's going to get you in trouble. So ensure you work with a regulated and a licensed stock market broker. Once you've identified the broker, here's a checklist that you can use. Number one, ensure that they have an online trading platform that works. You don't want to, be on lines in a physical bank or in a physical office trying to get some of these things sorted out. I've always recommended people to work with referrals as well and recommendations. Some companies claim that they have a good trading platform, and sometimes when you go to use them, that's not the case. So ensure that you talk to people who've actually used that company as a broker to tell you whether the platform really works or not. The second thing you need to find out is how long the broker has been in existence. Remember that this person is going to be advising you or guiding you through your stock market trading journey or through your stock market investing journey. So you want to confirm that they've been in the market. I always recommend stock market brokers who've been at least 10 to 15 years in the market. That's a long period of time. So you know their experience, you know they have a proven track record, and you also know that they are legit. The third thing you also want to find out is the brokerage fees. Here in Kenya, most brokerage firms will charge you around 1.9 to 2.5% per trade. So every time you buy or every time you sell, you're deducted a percentage. So anything between 1.9 to 2.5 is reasonable. But I think 2.5 upwards is a tad bit too high for brokerage fees. So you want to confirm that. And then the last thing, guys, please make sure that this broker actually offers advisory services to their clients. Some companies like the broker I use, I will link them down below in the description box. They actually offer free advisory services to all their account holders. So this has made me a very confident stock market investor, because every time I've kind of done my research, I always check in with them via email and tell them, hi, this is what I'm thinking. What do you think? And I'm able to get insights. They usually will give me recommendations, whether, or rather just affirm the decision that I have made. So I mean, why are you paying brokerage fees and working with a company that does not even pick your calls or reply to your emails? Please ensure that as much as you're working with a good broker, with a good platform, with good fees, especially as a beginner investor, ensure that that broker actually talks to you and they offer you advisory services. That will go a very, very long way to helping you gain confidence as you keep investing in the stock market from start. So the third step is quite easy, and it is dependent on the person you've decided, or rather the entity you've decided will be your broker, and that is to open a brokerage account. Here in Kenya, we call that a CDSC account, all right? So your broker of choice will ideally help you to open this account. And this is just a portal that stores information about the shares you've bought or even the shares that you've sold. And you can even see the value of your portfolio. It's a live platform, so you can see the value of your portfolio as it grows, as it fluctuates. And that is very, very important. For you to open a CDSC account, just approach your broker of choice. Tell them that you would want to open an account with them as your broker, and then provide the normal KYC documents. KYC just means know your client. So it's the usual ID, your tax certificate, maybe even a passport photo, and some of them will also ask for your bank statement as an anti-money laundering regulation. So of course they want to just confirm where the money is coming from. So once your account is set up, it usually takes around 3 to 5 working days, just depending on your broker of choice. At that particular point, you can buy and sell shares at any given point. So here in Kenya, through the Nairobi Stock Exchange, the market opens on the weekdays. That is Monday to Friday from 9 a.m. in the morning to 3 p.m. in the afternoon, okay? So the market is usually closed in the weekends and on public holidays. Now, the minimum amount of money that you can invest or rather through your CDSC account or through your trading portal, it's not necessarily a fixed amount. What we do have is a fixed trade size. So the minimum shares you can buy in the Nairobi Stock Exchange is 100 shares of any listed company. So let me give you a good example. If, for instance, company X is trading at 14 shillings per share, it means that ideally in this case, the minimum amount you would need to invest is 100 shares times 14, which is 1,400. And if you add brokerage fees, maybe 1,500 or 1,600 to buy a minimum of 100 shares. If this other company is trading at, say, 132 shillings per share, you see the minimum amount then changes. For you to buy the bare minimum amount of shares, which is 100 shares, then you would buy 100 times 132, which is around 13,200 to buy the minimum amount of shares. So it's never about the minimum amount of money, it's a minimum trade size. So you can buy 100 shares, 200 shares, even 1,000 shares. It just depends on how much money you have at your disposal and how many shares you want to buy. So the last step is easy because now that you've already investigated, you know, the companies you want to buy, you've opened an account with a broker, you can now kind of like start buying and selling shares. The most important bit for the medium to long term is now keeping tabs on your portfolio. So how do you do that? Number one, every publicly listed company is required by law or by the regulator. In Kenya, the regulator is the Capital Markets Authority to publish their financials either semi-annually, mostly semi-annually and annually. So you will get 2 financial reports every year, like a media report and then an end-year report, financial report. And in that report, you're able to see the profitability, you're able to learn about their liabilities. They even have like an investor report that's usually the beginning of the statements before you get to the financials. They can tell you, you know, how they've been doing in terms of innovation, what they have coming up, what their plans are. Like these investor reports are for you. So some of you guys hear on the news that company XYZ have announced their financials. You're seeing it on Twitter and you're just ignoring it. That information is for you, either as a potential investor or as an already existing investor. So normalize, guys. I've told you, stock market investing is not for lazy investors. So read up on those financials, read up on those investor reports so that you can get a very good understanding of what's been happening in that company. That helps you to be able to keep tabs, okay? The second thing, please subscribe to some of these things like The Economist, the New York Times. In Kenya, we have the Business Daily, the Kenyan Wall Street. There is such good data that comes to my email every week with regards to like current affairs. So if you want to really keep tabs on what's happening, like say in Kenyan companies or just in our economy generally, subscribing to these newsletters is amazing because they are niche newsletters. They're not just going to give you news on some unnecessary things you don't know. These are business news, economic news and stuff. So even just, I mean, every Monday I log into my emails in the morning. I have a bunch of reports that have come my way because I went out of my way to subscribe to those newsletters so that if anything is happening, like current affairs in these companies, financials are about to be announced, maybe they're about to announce their interim dividend or their end year dividend, I'm aware, right? So you have to be aware. You need to be smart babes and smart dudes, okay? So subscribe to these newsletters. That's where you also get information, okay? And then lastly, maybe one thing I need to mention, as much as we are reading, we are observing our portfolio, we are following up on our business news, also that's something that you need to do. Watch your business news. I'm personally not a fan of news. I find them depressing, but I do take my time to watch business news, okay? So also prioritize. So even as much as you're doing all of these things, as a parting shot, I'll tell you, do not obsess over the short-term fluctuations. Of course, there are things you'll be reading. The goal is to keep yourself educated. The goal is not to react to every piece of news. Remember that the stock market is actually known to generate good results in the long term. In the short term, there's a lot of fluctuations. And getting mad at these fluctuations, it's like getting mad at a baby for crying. Babies cry. That's what they do. No one is out here getting mad at them because we understand that's what they do. Now, in the stock market, in the short term, that's what the stock market does. It fluctuates up and down, like it's insane. So if you're trying to just kick tabs and, if the prices go up, you're reacting, you want to buy. If the prices go down, you're panicking, you want to sell. You will never sustainably make money in the stock market. I want you to imagine this screen as a graph, okay? So in the short term, it's kind of like going up, down, up, down, up, down, and it's fluctuating. However, if you spread that out in the long term, it's almost like the graph has been going up and down, yes, but also as an upward, or rather in an upward trend. So in the long term, yes, there's still fluctuations in the short term, but in the long term, if you choose sustainable companies, if you choose companies that have a good track record, companies with good financials and a bright future ahead, the stock market in the long term has been known to generate results. So don't be reactive. One of the easiest ways to get blood pressure is to be a stock market investor who is not patient and who reacts to every little piece of news or adjustment. The most underrated skill when it comes to stock market investing is patience. So you want to choose stocks that, remember the marriage analogy we used earlier on? Choose these stocks as though you're choosing a long-term marriage partner, okay? So don't react to everything. Read your news, read your newsletters, get the data, but don't react to everything. As long as in the initial step, number one, you did good research, okay, in terms of like the company that you've chosen, just relax and chill. I've mentioned this before, and and I said in some few weeks ago in a previous video that the only reason we hear and know about Warren Buffett is because he started investing in the stock market as a young man. I mean, he was a young boy because he was 11 years old, okay? And by the time we're hearing about him, he's in his 40s, his 50s. He's had a solid 30 years, 20 plus years to invest in the stock market. We only know about him because he was able to be patient, and therefore compound interest did its thing. So be patient as a stock market investor. The only way to get rich is to get rich slowly. If you want to get rich quickly, shortcuts will actually cut you short, and that is how we end up losing money in the stock market. So be patient, be very level-headed, and have a long-term investment horizon. Okay, guys? So I really hope that this video was helpful to you. You guys can let me know in the comments section down below if you have any questions, and be happy to answer them and indulge. If you're already a stock market investor, tell me how that has been working out for you. I look forward to reading your comments, your responses, and your experiences. So thank you so much for watching this video. Remember to turn on your notification bell so that you can be notified every time I upload a new video, and also share this with your friends. We need to be smart stock market people. Okay, so thank you so much for watching. I'll see you in the next one.